Holy smokes! Tesla stock is down about 5% today. Heading into today, it looked like people were more fearful than they should have been. In fact, the reality turns out it was much worse than even the bears thought. And yes, I'm referring to Tesla's Q1 2024 delivery number. Now, I have good news and I have bad news. The bad news is pretty straightforward. Tesla missed all expectations. This was like a 2 standard deviation miss on expectations for Tesla's Q1 deliveries. Total deliveries come in at 386,810, 2% of which are subject to operating and lease accounting. You had production of 433,371 Teslas. That means Tesla actually produced 46,561 Teslas that they did not sell in Q1. Now, maybe a little bit of good news could be that this 46,000 number, well, it could just roll into Q2, which would be good. Here's what Tesla said about this delivery number. Quote, "The decline in volumes was partially due to the early phase of the production ramp of the updated Model 3 at our Fremont factory and factory shutdowns resulting from shipping diversions caused by the Red Sea conflict and an arson attack at Gigafactory Berlin." Which, given these 3 headwinds that we've seen, it's not a terrible number, but it is worse than anyone thought it was going to be. To some degree, I think I was correct in saying the markets had priced in too much bad news, given Tesla stock's only down 5% and the number came out much worse than we thought. If Tesla were to come in at 400,000+, I think Tesla stock would be in the green. Now, you also have to consider the markets are falling quite a bit, with the NASDAQ down over 1% today, and we'll talk about why here in this video as well. But you would think Tesla stock would be down more than 5% with this kind of number that we got today. We have a little bit of good news. Tesla says they deployed 4,053 megawatt hours of energy storage products in Q1, the highest quarterly deployment yet. Which energy generation and storage is Tesla's highest margin business, so that hitting a new record this quarter is good news. But here's the good news I was referencing at the start of this video, and it's really twofold. Number one is obvious. You get to buy Tesla stock at cheaper prices if you do think FSD is in the evolving stage and we're potentially just a couple of years away from a robotaxi network. I like to be a little bit more conservative. My personal opinion, like if we were in a closed room just talking over some beers or a cup of coffee or whatnot, I would say I think the first cities are going to start seeing robotaxis within the next 12 months, as high as 24 months. I don't think it's going to take longer than that. But that's what I would say behind closed doors. To you guys, I'm going to say give it a couple of years. The other part of good news, if you're not interested in buying more Tesla stock, if you've been buying Tesla stock for a long time, is this delivery number was really just terrible. Okay, let's just say it for what it is. So the stock is priced for terrible things. Like, I don't know what else is going to be super shocking to investors after a delivery number like that. But what this really shows me is, I think, a little bit more confirmation that Tesla is focusing more on profitability. And I think this is what we're really going to come to find out and learn on Tesla's upcoming earnings, which are confirmed for April 23rd. And why I think this is because we just got a terrible delivery number, okay? I've said it like 4 times now. We understand, right? You're probably sick of me saying it by now. Just rub it in a little bit more. Why don't you? I get it. But I don't think Tesla would be raising prices on their products with that kind of delivery number unless they were just saying, screw it. Let the deliveries do what they do. We're going to focus on making as much as we can per car, per mega pack, per, storage, power wall, per all these different products. We're just going to focus on profitability. Because I don't know about you guys, but the Tesla back in 2023 would have been cutting prices big time, setting up for a number like that. Now, who knows? You can't jump to conclusions too dramatically. Maybe that increase in production relative to deliveries does get rolled over into Q2, but this is going to do a lot for lowering Tesla's full year delivery estimates on Wall Street. So as Dan and I have said just a couple of days ago, this was really a rip the band-aid off moment for Tesla. I mean, 386,000 deliveries times 4 is about 1.5 or 1.55 million deliveries for this year. So at this run rate, you're going to be quite negative from last year's number. Now, I think most people expect deliveries are going to pick up. Q1 tends to be the lightest quarter of the year anyways, and you are seeing good search trend activity for the Tesla brand. In fact, I mean, it's kind of shocking what you're seeing on Google Trends, but this will lower estimates. But let's be real with ourselves. It really doesn't matter what Tesla's deliveries are as long as they're not terrible. I mean, you know, who knows what they're ultimately going to be. But the markets, they're going to reward Tesla for becoming more profitable. That is what is going to drive Tesla stock higher or lower. It's not going to matter if Tesla beats on deliveries or misses on deliveries. Obviously, beating on deliveries is better than missing, but it's really going to come down to margins, EPS, just bottom line profitability. And I think in terms of what is actually important to Tesla stock, and that is profitability, Tesla is doing the right things to become more profitable. Just think about this logically. If they want to keep investing in the business without completely sacrificing the stock, they have to focus more on profitability. They have to boost that EPS, or the stock is going to fall much more than what we have seen now, and that's not good for the business itself. A lot of companies don't want to associate with you if your stock continues to plummet. I'm also going to cut to the chase here. The NASDAQ is down over 1% today. One of the worst days you have seen so far in 2024. You have officially broken down. You're no longer in a bullish uptrend, no matter which way you want to try to chart the triple Qs. But you did find support at 438, this line that I've had drawn here. In fact, the lowest point of the day today was $438.03 per share. So I think 438 is going to be a very important level. If you break under that, you're going to be setting yourself up for more downside. Good and bad news. Good news maybe for the bears, bad news for the bulls. It looks like inevitably that is going to happen. And then you really want to be watching your moving averages, your 50-day, your 100-day, and then your 200-day moving average. If you get back to that 200-day moving average, that is going to be rough. That's going to put you back just a little bit higher than your July 2023 highs. And I think you'd have to see something really break in the markets to get there, but a 5 to 7% correction from here seems likely. Now, what's happening today? Why are markets selling down? It's not Tesla that is causing it. Tesla doesn't have that effect on the markets anymore. What is doing the damage is your 10-year treasuries. So a weird thing happens in the markets. Maybe I wouldn't call it weird, but it's a phenomenon that we've seen recently. When 10-year treasury yields rise at a rapid degree, you tend to get downside in the markets. But specifically, when the 10-year treasuries start to get close to about 4.5%, you really start to get some downside in the markets. And 10-year treasuries are breaking out to what is now a almost 6-month high. You have to go back to November 30th of 2023 to be this high on your 10-year treasury yield. 10-year treasury yields are up from about 4.2% 2 days ago up to 4.36%. So that is quite a rise in just the last 2 days. And again, you're breaking out to new highs. It looks like 10-year treasury yields starting to derail a little bit. And when you're in this derail stage, that's not good. A couple different reasons this is happening. The government is obviously spending like they are drunk, and it is their birthday. I mean, yesterday was my birthday, and I didn't even spend any money at all, okay? Besides, going out to eat, the typical things. But that would be like me going and balling out, going to throw money around in the streets. That's what the government is doing. When you're issuing this much debt, the markets don't like that. Simple supply and demand, right? Treasuries selling treasuries. That's how they raise debt. Take a look at TLT. TLT is responding and TLT is falling. TLT falling, selling of the bonds means that bond yields go higher. Kind of works like a dividend stock. You buy a $100 dividend stock that pays you $5 a year. Perfect, fine, that's great. You get 5% a year. If everyone wants to buy that dividend stock and there's not a lot of selling pressure, and let's say that dividend stock goes to $200 per share and you still get paid $5 a year, then you make 2.5%. If nobody wants to own that dividend stock that you bought at $100 per share, you get bad news. You get the company that's selling stock, and let's say that dividend stock falls to $50, but you still get paid $5 a year. Well, now you're at a 10% yield. That's what's going on right now. There's a lot of issuance of treasuries, and it's starting to catch up to the bond markets. In other words, countries, firms, investments, investment advisors, pension funds, they're kind of starting to revolt against the treasury market a little bit. Now, the treasury market is also, to some degree, saying we're not getting as many rate cuts as the markets expect. The markets are currently pricing in 3 rate cuts, the first of which to start in June, but the odds of that are very volatile. As I shared yesterday, at one point yesterday, there was a 0.5% chance of a hike in June. It is very volatile. Today, there's a 61.3% chance of this rate cut in June and a 35.9% chance of a continued pause. Now, part of this volatility and part of the rise in treasury yields that we have seen over the past 2 days came based on yesterday's data. Now, yesterday's data showed that, let's see, ISM manufacturing PMI, that manufacturing is back into positive territory. So you're seeing growth in manufacturing. That's great. But with that, ISM manufacturing prices are also rising. So you're seeing some inflationary pressures as manufacturing is coming back. And I think the markets are saying we haven't seen good manufacturing data for 18 months. If manufacturing starts to come back, maybe that adds another bout of inflationary pressures back into the economy. So that's a little problematic. But that data was yesterday. And it seemed like the markets really didn't respond much yesterday to the drop in TLT, the rise in 10-year treasuries. TLT dropped almost 2%. It was over a 10 basis point move higher in the 10-year treasury. Markets didn't react, but they chose to react a little bit more today, even though TLT is only down about 0.6%. So the markets kind of worked with a lag on the treasuries. Now, this morning, you had JOLTS job openings that came out. It was a nothing burger. You came exactly in line with estimates, so I don't think that had any effect. Fed speakers today did not have an effect at all, kind of just status quo, the same old, same old. JOLTS job quits did rise more than expected by about 100,000, a little bit more than that. So maybe that's a sign that people are quitting their jobs because they think they can get a better job. We can't draw any definitive conclusions off of that, but that's what I've heard from some investment managers on Wall Street. And if you thought manufacturing PMIs gave the markets a big move, specifically the bond market, well, tomorrow's data with ISM services PMI, that's going to be even more important. Again, especially your ISM services prices. And I'll break that down for you in the next video, go over my estimates and what could come next for our markets. With that said, we do have other Tesla stock news as well today. GM has sold 16,425 EVs in the US in Q1, down 20% year over year. Most of the deliveries were 7,000 Bolts. Lyrics coming in at about 5,800, the Hummer EV at about 1,700, Silverado EV at 1,061, Blazer EV at 600, and the Bright Drop at 256. So if you thought Tesla had it bad, GM has it even worse. Over 40,000 customers have reportedly canceled their Fisker Ocean reservations. That is 57% of their order book. Despite the production and delivery miss, Tesla still sold 28% more EVs in Q1 than BYD. The mainstream media crowned BYD as the new #1 a few months ago, but it lasted just a single quarter. Bearing any unexpected issues, some of the headwinds that Tesla experienced in Q1 won't be present in Q2. Brutal quarter, but Tesla will move past it. Rivian also announced their Q1 deliveries today of 13,588 vehicles versus the estimate of 11,893 units, while production was 13,980. But what happened to Rivian? Rivian is down about 5% today. The markets just have no chill for EVs. Gary Black writes on X, how do we think about Tesla at $165? Absent a $25,000 to $30,000 EV until early 2026 to fight the plethora of $25,000 to $30,000 compelling EVs and a nascent Tesla advertising strategy, it's hard to be bullish. Tesla can cut prices on the Model 3 in the interim, but there's limited inventory on Model 3 Highland, so price cuts don't make a lot of sense. FSD 12.3.3 is a nice add-on that can sell more Teslas, but not at $12,000 or $199 a month. Using Apple as an analogy, the most appropriate sales strategy may be expanding comms to ICE users to convince them to go EV, lower upfront and ongoing costs, charging, convenience, better tech, near autonomy with proper disclosure, safer, and good for the environment. I share this not because I care what Gary Black says. I share this to really just point out that you are seeing basically everyone that used to be bullish on Tesla, besides Cathie Wood and Dan Ives and some of your other kind of longer term bulls, just a few of them, by the way. Basically, everyone else is now bearish on Tesla. And I am the contrarian. I am the biggest contrarian that you will know. Unless something shifts with the longer term trajectory of a business, I love to be the bottom feeder. I can wait a couple months. I can wait some time for Tesla to start doing better. And I think if autonomy was the reason why you ever invested in Tesla to begin with, the robotaxi network, full self-driving, really, getting more developed, this should be the time in which you are most bullish. And again, I do want to point out, I think Tesla is going to focus more on profitability. So who gives a crap what this post says or what delivery numbers come in as? Tesla's going to sell what they sell. Cutting prices really doesn't help things at all. Let's just be honest there. It doesn't help things at all. If Tesla focuses more on profitability, they can raise EPS estimates. That is the thing that drives stocks higher. In the near term, it's raising EPS estimates. In the longer term, it's coming in with EPS numbers that you set as your guidance and your estimates, right? It would be like Tesla, raising EPS estimates, coming the quarter, coming to, the actual earnings. Tesla beats the estimates that they already, gave. Right. I don't expect Tesla to actually give guidance, but that is what moves a stock higher in the near term. It's EPS estimates going higher and then a company actually coming through and beating those EPS estimates and EPS estimates rising further, so on and so forth, can be a very, staggered kind of increase to expected profitability. Remember, the markets don't care about what happened. The markets are a rewarding system for predicting what is going to happen. So that's the reason why I'm bullish right now, because I think Tesla's earnings are going to go higher. And I think Wall Street, nobody's expecting that. But if I'm wrong, I'll just have to bite the bullet and be wrong. But as I have mentioned in other videos, Google Trends data is the strongest you have seen in well over a year for the entire Tesla lineup, especially the Cybertruck. The Cybertruck recently going from 39 to 44, a huge jump there. The Model 3 going from 39 to 40. The Model Y going from 39 to 38, slight downtick there. The Model X recently going from 9 to where it is today at 11. And the Model S going from where it was around 10, 11 or so, sitting at about 14. So you're seeing solid uptick in search trend activity across the board for the entire Tesla lineup. Global inventory numbers for the Model Y ticking down a little bit. Here you can see the Model 3 and the Model X really seeing an uptick in inventories. That could be good news if the, Highlands in Fremont are more difficult to produce. Maybe this shows Tesla starting to produce more of them. That would be great. Model S inventories are up about 150 as well, but not very notable. And Tesla is currently running about 4,000 different ads via Google. They're also advertising on Facebook, Instagram, and other platforms. So Tesla's really running more than 4,000 ads, and maybe this does have an effect on boosting demand as well. Keep in mind, the Cybertruck being such a polarizing product, I've heard you're basically like a celebrity when you're driving the thing. Everyone wants to get pictures. They're trying to catch up to you to see who's driving the thing. Could be quite dangerous, to be honest, but with a product like that, I don't think there won't be a halo effect, right? I think it's going to be pretty impossible to not see the rest of the Tesla brand benefit from that. How long does that take? How much demand does that add? Is that something that is material to the overall number? I don't know, but it's definitely a positive that is coming in 2024 and potentially already happening according to Google Trends data. And after all, maybe that is the reason why Tesla is actually raising prices. Maybe they are starting to see an influx of orders coming through, and well, that's something that I wouldn't count out as well at this point, even though we just got a really bad number today. Not to mention, full self-driving search trends are at the highest level by far that they have ever been at. This is Google Trends for full self-driving, the most search trend activity in California, where this is 100, but other key markets as well, like Washington at 71, Texas at 42, Florida at 57, my home state of Michigan at 28. Figured I would throw that out there on the lower side. But nonetheless, Tesla's biggest markets are seeing a rapid influx of Google Trends data for full self-driving, with Google Trends showing that this should be at 100 once the data is finalized, which is, again, by far the highest it's ever been. Option activity in Tesla stock today, quite negative from hedge funds and institutions. You have a positive order value of 27%. You have seen 1,067 orders, totaling $278.54 million. And short sellers are loving this today with cost to borrow fees at about 10%. It looks like there is a lot of shorting activity taking place in Tesla stock today. The higher the cost to borrow fees, presumably the more demand there is to short Tesla and the more shorting that is likely taking place. You currently have 3.71% short interest off free float with $18.01 billion currently in short positions. And this comes to you guys as likely no surprise at all. Over on StockTwit, sentiment for Tesla is at 20 today. That is considered extremely bearish. Yesterday was neutral at 51. It really doesn't matter what we get from Tesla these days. It seems like even retail investors are like perma bearish on Tesla. At least right now they are. Message volume is at 64, which is categorized as high. Yesterday was at normal, and normal at 47, and the participation ratio today ticking down a little bit at 55, still considered high. So there's a lot of accounts talking about Tesla. There's a lot of accounts writing messages on StockTwits about Tesla, but a vast majority of them, about 80% of those messages, are bearish. And I guess the technicals just don't lie on Tesla. Like I said in the last video, I was leaning bullish towards today because the expectations were so low, and I figured Tesla would come in above 400,000, maybe 410, 415, 420,000, and that would likely be seen as positive for the stock. If that would have happened, I think Tesla stock would not be down 5.5% today. I think Tesla stock would be maybe substantially in the green, because I think the markets were priced for a really bad number. And even when you consider, you know, 386,000 deliveries, that is a really bad number. And Tesla stock's only down 5.5%, albeit the NASDAQ is down over 1%. That's also having an effect on Tesla. So if you were to strip out the bearishness in the broader markets today, Tesla would probably only be down like 2 or 3%. You even seen Rivian that beat their delivery estimates, and their stock is still down 5%. So albeit it was a bad number, considering that bad number, Tesla stock still did okay. But again, I was leaning towards a bullish reaction. And the charts, as I said in the last video, the charts were suggesting we may get a gap down coming tomorrow. And, well, the chart was right and I was wrong. We did indeed get a gap down under this bottom end of the channel here, this support level. And just like you seen last time, you gapped down. What happened last time is you continued to sell off, so it wouldn't surprise me if Tesla makes its way down to about 158 or so and trends down to this trend line. I guess a bigger problem for Tesla's stock now, at least before Tesla's earnings, are if the markets just go through a correction here. If the markets go through a correction here, it's likely to negatively influence Tesla, like you're saying today, and that could cause even further selling pressure. I'll go over a little bit more of what I'm expecting from the markets, the data coming out tomorrow, where I think Tesla stock can go over the next couple of weeks, whether or not I think a larger correction is coming in the next video. So stay tuned to the channel for that one. That will be coming out at 8 p.m. tonight, Eastern Standard Time. In the meantime, let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel, because why not? It's free 99. It costs you absolutely nothing to do so. You guys enjoy the rest of your day, and I will see you in the next one.